After 2019, we had what the pandemic brought to us. So we were faced with a lot of risk-averse behavior. So carrying that into 2021, even though there were lots of undervalued counters on the market, it was tough to indicate or tough to say with all certainty that the market is going to bounce back. We are aware of the valuations of the attractive multiples on the market, but the sentiment just wasn't there. So fast forward to today and posting the kind of returns that we've posted, the big question is, what have been the key drivers of the growth? Given that the macroeconomy still remained, the recovery was fragile, there's still a lot of uncertainty with regards to the outlook for the macro. So what really has been the driver on the Ghana Stock Exchange? For me, the first one will be the relatively stable currency. So our currency in Ghana is a proper free-floating currency, not like our neighbors perhaps in Nigeria would tout, but ours have been a proper free-floating currency. So over the years, if you look prior to 2017, you would have been seeing depreciation against the US dollar north of about 16–17%. That had been the average annually. But even in the midst of the financial sector cleanup and the COVID, what managers of the economy have done very well is to manage the currency. So if you're looking over the last 3 years, you'll notice that on an annual basis or averagely, the cedi has depreciated somewhere around 7% against the US dollar, which has been a key factor that foreign portfolio investors look at. So that has been number one, the fact that the currency has been relatively stable. And while it's wobbled a little bit in the last few months, we are still under just under 4% depreciation from year to date in 2021. So the outlook for the currency seems a lot more stable. And this has attracted a lot more foreign portfolio inflows. The second and perhaps the strong thing for the Ghanaian market is that the defensive-oriented stocks, particularly in the telecom sector, and when I say telecom sector, I'm speaking specifically to MTN Ghana, has been the key stock that has driven the rally in Ghana. Since listing, the stock has been declining significantly, whilst the fundamentals have been strong. Earnings momentum has been good, and this even cuts across not just the telco sector, but for all defensive-oriented stocks on our market. So speaking specifically to the telcos, we saw a lot more data growth, data uses, increase in subscriptions, and the good thing is that the mobile money was also driving a lot of growth, even with the depressed macro environment. We were seeing a lot of these payment channels doing well. The good thing, what happened then was that you saw a lot more interest, given the stability of the currency. We started seeing a lot more interest in the likes of MTN. And given that had accounted for, or that accounts for about 25% of the market capitalization of the Ghana Stock Exchange, the stock has rallied more than 80% this year, and that has pushed a lot of the rally. So number one will be the stability of the relatively stable currency. Number two is the strong earnings momentum of defensive-oriented stocks like MTN. And the third point that I'll say has driven the rally in Ghana has been the fact that we are seeing an improved participation from locals. This has been necessitated by the fact that there's a strong divergence between risk and return, particularly in money market securities. If you know anything about Ghana, you realize that we are one of the countries with very high interest rates in Ghana. And so a lot of the local investors participate in fixed income, a lot more in the money market. What has happened in the last 6 or so months is that accommodative monetary policy has forced interest rates on money market securities lower. And this has forced local institutional investors to take up more risky assets. And now we are seeing a stronger participation from locals. So three key things driving the rally. One, our currency being relatively stable. Two, defensive-oriented stocks showing a lot of momentum in terms of earnings. And three, the fact that local investors, local institutional investors are participating strongly in our market. The next thing will be how far can the bull run? How much momentum or how much more momentum does the stock exchange have or Ghanaian equities have? Looking in the near term, I feel that a near term is till the end of the year. We think that the market has done quite a bit. We could see some profit taking in some stocks that have rallied quite significantly. However, we think that, and local participation cuts across sectors, whether it's defensive-oriented stock, consumer cyclicals, or whether it's banking stocks. What the locals are doing is taking positions in mid-cap stocks. So while we think that the momentum is there, we think that it will slow down compared to what happened in the early parts of the year. So there will be some level of slowdown in momentum. We could see some bull traps emerging in the latter part of the year. But if you're looking medium term and where the opportunities are, we believe that there are significant opportunities across multiple sectors in Ghana. The key thing is that the financial sector has been the key driver of growth on the market. And from year to date, it's done under 12% growth. And we think that this is because there's been, given the financial sector cleanup, given the COVID, credit expansion has been very, very muted. However, we think that post-2022 or mid-2022 thereabouts, when asset quality has been cleaned up, and we are seeing that even now, the sector or the industry will be ripe for a credit expansion. We are seeing loan to deposit ratios that have come down from about 80% down to somewhere around 45%. So there's the need to expand credit. And we think that once there's a bit more clarity on the macro situation, we will be seeing a lot more credit expansion coming through, particularly on the banking side. So for medium-term opportunities, we'll say that the financial stocks, key of which you have the likes of Equibank Ghana, you have the likes of Standard Chartered Bank, and Cal Bank, and so on the Ghanaian burst. We believe that will lead the rally, and at the current valuations, we see significant upside. The other important thing is the consumer sector. We are seeing that COVID they bore the brunt of the pandemic, where they've been negative earnings for significant amount of time during the pandemic, but we are starting to see a bounce back. The market also punished them severely, so a lot of them are trading significantly below their book values. So we are seeing a lot of momentum there, a lot of upside in the consumer sector. We believe that looking at their fundamentals, a lot has also restructured their route to market. They have improved their product portfolio. It's more robust. There's more cut across the different markets or the different consumers. And we are seeing a general change in the structure in their route to markets, which is positive. We are seeing a lot more of them in the formal retail space and serving customers. We are seeing a lot of them in the corner stores compared to the open market trade, which was really affected by the pandemic. So we believe that the consumer sector will also see significant growth over the medium term. We've already started seeing quite a bit of them rally. We think that the other sector that will also be doing great will still remain the telecom sector. We think that the mobile money and the payment platforms, the unique opportunity there is significant, and we believe that that will drive a lot of the growth. If you look at mobile money, average revenue per user, it hasn't even started scratching the surface. You look at data growth in the sub-region, and you see there's a lot of momentum there. So three key sectors that we think could drive the growth, where there are a lot of opportunities. We believe that the financial sector, we also see consumer, and we believe that the telco sector will be the sectors to drive growth. And there's significant amount of opportunities in these sectors. The macro environment is also steadily becoming a lot more certain, and we think that the Ghana Stock Exchange in the medium term will be a place that investors should look at and cherry pick the undervalued stocks and the best liquid stocks. At these pricing, I don't think that you will be seeing them at the current levels for several years, so it's a good opportunity to jump in. With that, Watson, I'll bring my presentation to an end and allow my other panelists to have their turn. Thank you.